Hello, everyone, and thank you for taking time to attend this call. I'm Sid Rajeev, Head of Research at Fundamental Research, and our guest today is Martin Turenne, CEO of FPX Nickel. FPX holds one of the largest undeveloped nickel deposits in the world. A recent PEA showed that the project has an after-tax NPV at 8% of $1.7 billion US. FPX's current market cap is Canadian $135 million. We launched coverage on FPX last August as a top pick, and its shares have since doubled. To see our entire list of top picks, I encourage you to check out our platform, researchfrc.com. And if you become a member, you'll have real-time access to our top picks and all of our reports. So the agenda for today is I'll kick off the call with our thoughts on nickel demand for electric vehicles, EVs, and the recent developments that could potentially change the nickel supply space. Martin will take over there and from there and introduce us to FPX, highlight some upcoming catalysts and things we can watch out for. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. We encourage questions to be directed to FPX since we have Martin on the call today. Here are some key disclaimers. Please take a moment. So let's start with the question, why EV metals? And this chart gives us the answer. Over 50% of all new car sales is expected to be electric by 2040. This is up from just 5% today. EV sales is expected to reach 25 million by 2030, up from just 2 million last year. Pretty much all the major vehicle manufacturers are making and planning significant investments into the sector. Now, declining battery costs is the #1 reason that is expected to drive sales of EVs. In the last decade, battery costs are down 85%. Prices of EVs are expected to be competitive starting 2024, which is when we believe EV sales will really start to pick up. Now let's see how we can capitalize on this expected surge in EV sales. The first step is to understand a battery's composition. In a lithium-ion battery, lithium is used as the electrolyte, graphite is the anode, which is the negative side, and cobalt and nickel are used as the cathode or the positive side. Now, there are 5 main types of lithium-ion batteries. The chart here on the top right shows the composition of metals by battery type. Or the composition of batteries by metals. We believe that NMC and NCA will be the most popular batteries as they offer higher energy density, implying longer range. Nickel is used in both batteries. We estimate that each electric vehicle will use approximately 30 kilograms of nickel. Now, if we use this figure and the expected number of sales in 2030, we expect a new demand of 750,000 tons per year of nickel. This is 6 times the current demand for nickel in batteries. Now let's look at the supply side. Nickel supply can be basically categorized as class 1 and class 2. Class 1 or the sulfide ores is suitable for batteries, while class 2, which is lower grade, less pure, they are only suitable for stainless steel due to their iron content and impurities. Class 1 accounts for approximately half of the global supply. Now, 2 weeks ago, there was a development which could potentially be a breakthrough for nickel supply. China's Tsingshan Holding Group, which is the largest stainless steel producer in the world, announced that they have developed a new technology to convert class 2 nickel into products suitable for EV. As with any commodity, when supply increases, prices decline. Nickel prices dropped 12% from this announcement. Now, we actually see Tsingshan's news as positive for nickel, and that's because the class 1 market is expected to experience a deficit in the near term, as supply is not expected to keep up with rising demand. Musk recently stated that his biggest concern for battery is long-term nickel supply. As battery manufacturers are still evaluating battery types for long-term use, if there's a shortage of nickel, we believe they will move away from batteries that adopt nickel. Tesla is actually looking more into LFP batteries, as LFP does not use nickel. Tsingshan's products are only expected to be delivered later this year. So we're not sure of the quality of the end products and if the process or if their process is energy intensive or pollutive. If Tsingshan is actually able to successfully convert Class 2, we believe it will provide comfort to EV manufacturers and prompt them to use higher efficient NMC and NCA batteries. So bottom line, we believe the recent developments are positive for nickel, which is quite contrary to market consensus. With that, I would like to welcome Martin, CEO of FPX. Martin, you'll be able to share your screen. Please go ahead when you're ready.
Thanks, Sid. I hope everyone can see my screen there.
Yes.
Excellent. So again, we caution everyone to look at the disclaimer regarding forward-looking statements, which can be found on our website. And yeah, to your point, Sid, on nickel demand going forward, I think this slide from Glencore that they recently put out makes the point quite strongly. Effectively, they see from the push towards electrification that copper demand would increase by about 2 times over the next 30 years, while they see nickel demand increasing by 3.7 times. So you could see the massive impact on nickel demand that will come from the push to electrification. That suggests that the world needs to build new nickel mines to meet all of that growing demand. And that's where FPX Nickel comes into play. So we're a Vancouver-based company. We trade under the ticker symbol FPX on the TSX Venture Exchange. We have a very large land position in central BC, including which we call Descartes, and within that we have defined the Baptiste deposit. The Baptiste deposit, we completed a preliminary economic assessment on that project last year, which shows it could be one of the 10 largest nickel mines in the world in terms of annual production, with a very long mine life, over 35 years. Very favorably positioned with respect to operating costs within the bottom quartile of the cost curve for nickel at $2.74 per pound, versus the spot price today in the range of $7.50 a pound. We also have the ability to produce nickel in a way that would be suitable for use in either stainless steel, which is the traditional source of nickel, or for the battery market. So we're positioned quite uniquely there in the marketplace to have that market potential to exploit both of those end uses. And then finally, in terms of the summary here, we believe that we are very much the green choice for nickel, that we can produce nickel in a fashion that would be quite environmentally friendly, particularly as it relates to the carbon dioxide emissions associated with production. And we'll speak on that in a few moments. The map here shows where we're located, the Descartes project in central British Columbia. You can see we're quite close to rail, within 5 kilometers of the project. Also quite close to the Mount Milligan mine, which is a similar scale bulk tonnage open pit mine, similar in scale to what we have envisioned for the development approach at our Descartes project, which was Baptiste. We control a dominant land position over 245 square kilometers in size. Baptiste is the first deposit that's been defined. That represents only approximately 1% of the total land mass that we control at Descartes. We believe there is high potential to delineate other very large scale nickel deposits at the project, in particular at the Van target, which is located 6 kilometers away from Baptiste, and which hosts a target that we believe could be larger and or higher grade than Baptiste. Now, this Van target has never been drilled. We will be drilling it for the first time this summer, driving towards some exploration and some discovery potential there to discover another world-class ore body within the same district here at Descartes where Baptiste is. I mentioned earlier the PEA that we put out in September of 2020. That's the preliminary economic assessment on Baptiste. Shows very high NPV on an after-tax basis of $1.7 billion. And you could see again here where our positioning is on the cost curve at US $2.74 per pound of nickel. We see the ability here to be a very low cost producer for a very long time and be very, very competitive against the peer group. Despite the very positive PEA and relatively strong share price performance we've had over the last several months, we still view this as a deep value opportunity for investors to consider. This slide shows relative valuation on a market cap divided by project NPV basis for a number of different base metal projects globally held by junior companies. And what you can see is that projects at this stage, the underlying companies typically have a valuation of 0.15 to 0.2 or 15 to 20% of their project NPV in their market cap. Our market cap only represents about 5 to 6% of the project NPV. So we do see this as still as a deep value opportunity that is still sort of under-recognized in the market, and suggest this could be an interesting play for people to look at within the context of base metals generally and nickel specifically. Besides the importance of being a very low cost producer, we see the ability here to be a producer with a very low carbon footprint. We think this is critically important for battery metal production going forward. If the metals that are going into the EVs are produced in a way that is dirty or that is highly polluting, it basically contradicts the objective of the electrification movement. And so what you have to look at with the nickel market is the different types of nickel production that's out there, which Sid alluded to earlier, and what the associated carbon footprint or the CO2 emissions are for each of those styles of nickel. What this slide shows is that laterite production in particular has a very high carbon footprint, ranging between 27 to 69 tons of CO2 emitted for every ton of nickel produced. We would be at the very bottom end of the scale. We take advantage here of the fact that our processing facilities will be on the hydroelectric power grid here in British Columbia, which is a very low carbon source of power. And that means that we can produce nickel here for a very low carbon footprint. Why is that important? Well, among many of the reasons we think it's important, it can be encapsulated in this proclamation from the European Union in December, whereby they stated that going forward, EV batteries that are sold in the EU market will have to have a carbon footprint below some certain threshold, and that above some certain threshold, those batteries simply will not be accessible to the EU market for sale. So that implies that dirty nickel will not be able to find its way into EVs in the EU market, and we suspect going forward that other jurisdictions may adopt similar policies, which could potentially put a premium on clean nickel or low carbon nickel of the type that we envision producing. Just quickly here on the share structure, on the capital profile of FPX, we have 186 million shares outstanding. Market cap is currently in the range of 140 million Canadian. One thing I'd like to emphasize here is the very high ownership position by management. Management owns over 20% of the company. And so we are very highly aligned with general shareholder interests. And we think we're quite rare in the space for a company to have that high level of insider ownership, and something we're quite proud of. So with that, I'll stop the screen share and I'll pass it back over to Sid.
Thank you so much, Martin. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So Martin, we have received a number of questions, starting with what's your current cash position and do you have to go back to the market? I think I can answer that. As per your presentation, you said that you have cash of $5.7 million, but maybe you can answer the second half, which is, do you have to go back to the market to raise capital?
Yeah, so we do have about just over $5.5 million in the bank right now, and actually, just as we're discussing here this afternoon on March 17th, we've announced a bought deal financing for $10 million. So we envision that is more than enough to fund our operations here over the next 2 years with that financing in hand.
Okay. The second question is, what's the development timeline for our feasibility study, and how many years realistically to go to production?
Yeah, good question. So it's important, I think, for companies to be realistic about this. Our group has certain members of our group have deep experience in the development of this scale of project in Canada and in BC generally. We envision approximately another 5 years of feasibility demonstration through a preliminary feasibility study, a bankable feasibility study, as well as all of the permitting required before this project would be construction ready. So about 5 years or so.
Okay. How do you compare your project to other nickel projects in North America? And why are companies such as Talon, I guess Talon trading at much higher multiples?
Yeah, good question. So in terms of the comparison, can you still see my screen there, Sid?
Yes, Martin.
Yeah. So I think this slide is helpful as a way of kind of comparing projects. It compares a bunch of the nickel projects held by juniors on the basis of the ratio of the mine life to payback. So mine life divided by payback. We think this is a very strong metric that can be pretty reliably used to measure the value of varying projects with varying mine lives in varying commodities in some cases. And what that shows is that we have a very high ratio here as compared to some of the other projects out there. So we do think at this scale of project that they're really weak. We're a standout in terms of the scale of annual production that we can generate. To the point on valuation, yeah, we see a diversity of valuations here, relative market cap relative to project value. Talon has a great project there. They are certainly by any measure, well valued, and we have high regard for that project. So I wouldn't comment any further than that, just other than to say I think this shows that there is certainly a value opportunity with FPX.
Yes, and we also note that FPX's back piece is much bigger in terms of resource production potential versus smaller projects like Talon's existing resource estimate. Which global companies would be capable of developing a deposit of your size? How would you handle a partnership from the automotive sector?
Yeah, so the first question, this is a large project. It will be one of the 10 largest nickel mines in the world. It will have a mine life of 35 years. So we do think the large diversified companies out there of the world are really the target audience in a way for a project of this scale. And so we've had, several years of constructive dialogue with a host of those companies, both those in the quote unquote Western world as well as those in Asia. So there's a host of companies out there that have the sufficient scale and operational capability to take a project like this on. Partnership in the automotive industry, whether the battery makers or the automakers, that is certainly something that we have seen a fast growing interest over the last year from those groups who are starting to have to think about, security of supply of nickel units for their batteries and obviously ultimately for their vehicles. And we've started to see particularly the battery makers step out and look at upstream investment in mining projects. So that's something that could help to unlock the puzzle here for us from a funding standpoint to help take this project into production. And it's I think good for companies like us because it expands the competitive field of potential partners and acquirers. So it puts us in a better position for sure.
Okay. What will be the use of funds from the current financing? And there's a bunch of questions. I'm going to group them into one. So basically, what are the key catalysts for FPX this year?
Okay, so on catalysts, really there's a sort of a dual track strategy. The first is moving Baptiste forward into preliminary feasibility study. So that includes metallurgical test work, infill drilling, updated resource estimate, et cetera, geotechnical and environmental work that goes into completing a pre-feasibility study over the next 18 to 24 months. And so that would be the large share of the use of proceeds for the financing that was announced today. And in a parallel track, though, we still see a lot of discovery potential to discover or to delineate, potentially multiple world-class nickel ore bodies here at Descartes, including at this Van target. So we will have a maiden program this summer at Van, and we'll start small And if we, if there's strong potential here, it is something that we could expand this year or in years to come to continue to hopefully delineate another large ore body there.
Okay. Do you have a guidance on how much you intend to spend on exploration in the next 24, 1 or 2 years?
Yeah, this year we'll probably spend in the neighborhood of 2 to 2.5 million on drilling. One of the nice things about this ore body is that it's disseminated and very homogeneous, so you don't have to spend much in drilling to actually prove up a lot of tonnage very quickly. So that would be a minimum, but we could certainly see ourselves doing a lot more than that if we're seeing exploration success at this fan target.
Okay. There's also questions asking, is this version of the presentation on the company's website?
It is, yes, it is. And those who can access it or would like it directly from me, people can email us at ceo@fpxnickel.com, and those emails come directly to us, and we can provide copies of the presentation.
Okay, just to go back on the funding requirements and then the current capital raise, is it fair to say that you will not have to go back to the market for at least for the next 12 months?
Oh, absolutely. Absolutely. Yeah. No, this fundraising that we've announced today will secure the next 2 years in terms of our planned work programs.
Next one, there are a couple of questions on your CapEx estimate and how you intend to fund. Now, Martin, do you have a screen which shows the CapEx estimate itemized?
Yeah, CapEx estimate itemized, not here. The capital for the project is 1.7 billion US, so it's a considerable number. The majority of that is actually for the concentrator, the processing facilities. I'd say on a direct line item basis, that represents about half. And so it certainly is a high number. But what I would say is that the nature of nickel mines of this scale is that they're very heavily capital intensive. These blue bars on this screen, so the 7 most recent nickel projects of this scale that were constructed in the last cycle between 2010 and 2013, those projects had an average capital cost of just under 4 billion US. So the nickel market, particularly for projects at this scale, it's kind of like the porphyry copper business in terms of the capital intensity. Now, in terms of how we raise the money to do that, obviously as a junior company with a fairly small valuation today, that's not something that we need to concern ourselves with in the very near term. Ultimately, we do think that this project will sit in the hands of a major mining company. A multi-generational mine life and one of the 10 largest producers for nickel in the world. Assets of this scale don't typically sit in the hands of a junior company when it comes time to, for project finance, construction, and operation. So for us, the objective is to continue to de-risk the project, to add value to it at the highest technical standard. And ultimately, we think it will sit in the hands of a larger entity.
Which is the exit strategy of most juniors out there. And once the large cap, eventually, if they acquire this project, it'll be funded primarily through debt. Just one more question. What are your thoughts on the recent announcement by Tsingshan?
Yeah, I could go on at some length there. I think the way you characterized it was quite good. The world just simply needs more sort of quote unquote battery suitable nickel. And so I share your view that this is good for the nickel market. It will help to moderate the nickel price so that it doesn't sort of fly away too high and therefore entail sort of substitution risk. At the end of the day, it actually doesn't add to overall nickel supply at all, right? The pie is just being chopped up in different pieces. So the key structural story for nickel is that the market is facing a deficit this year, and in future years, those deficits are expected to be very large. And so, how the pie is sliced up is not really as important as what the size of the pie is. And from a demand standpoint, that pie is growing very, very large, and there just isn't enough supply out there yet to meet it in the coming years. And that's why the world needs to build new nickel projects.
Yes, and then just to extend on that a little bit, what Martin mentioned by pie, let's say you move class 2 nickel to batteries, then what it means is class 2 will not be enough for the current stainless steel production. So the overall size of the market has not changed. It's just there might be a shift in the supply for each end products. With that, I think that concludes everything. I don't see any more questions. Thank you so much, everyone, for taking time today. A recording will be uploaded on our channel shortly. If you wish to see our reports on FPX, please check out our platform, researchfrc.com, and sign up today and be a member. Thanks again. And thank you, Martin, for taking time today. Wish you all the best and stay safe.